it's already made quite a significant move up. And we might have a bullish bias at this point, but Corio has been bullish since all the way back here, right? And if you have waited until this moment, for example, to enter into a Bitcoin position, just know that Corio is much further ahead than you are already, right? And then there were people that all the way back here were extremely bullish on Bitcoin and buying Bitcoin. And so the longer you wait, the farther this chart goes up before you take on a position. The more of a handicap you're putting yourself at versus the people that entered earlier. And from that perspective, the fact that Bitcoin is already near its all-time high means that people that are coming in and buying the asset now are at a very, very significant disadvantage, right? They're basically playing against people that now have, as soon as this makes an all-time high, remember that means that 100% of people are essentially in profit compared to, or nearly 100% of people are in profit compared to what they bought the asset for. Whereas with things like ETH, it's still not great because you could have taken on a position much sooner, but there's still all of the people above this price point that you're still in front of when it comes to the advantage in holding this asset. Now, again, like there are going to be a bunch of people down here that you're going to wish that you were them if you decide to take on an Ethereum position right now. But at least from the perspective of these guys up here that are still waiting, to be in profit, you will be in profit before they do, and that means that you're at a stronger advantage. And I think that this is kind of the perspective that I'm trying to bring to this call a little. And if Keith was here, I'd be really interested to hear
Keith
what
is here.
Oh, he's here already. Okay, wonderful.
Keith joined us.
Really, really.
I wasn't going to cut you off.
To...
I welcomed Keith in the comments. Okay, so in the beginning, I said that Keith was going to be a little bit late. Mark, I didn't mean to cut you off. I just thought, you know what? Since you were wishing he was here, or like thinking if he was, bring him into the actual conversation here and tell him, he sees what you're looking at.
Just bear with me 38 minutes. I'm going to rewind and start with Corio because I want to make sure I got all his stuff.
We'll hold.
I'm definitely going to go back and listen.
Yeah, it takes for 30 minutes, so you would probably need to listen again.
Sorry, I'm late, guys. Had some parenting to do, but now I'm back.
I get it.
So
I was on a Twitter Spaces this morning, Keith, while I was driving. They're like, "Did you get pulled over? Were you at a red light? Like, we hear your car." I'm like, "I'm sorry, I'm momming."
Yeah, I had to take.
So I get it.
I had to take my kid to work. We have new hours now that school's out.
Keith, for anybody who is just tuning in for the first time, I was able to give Crypto Corio and Mark their proper introductions. I mentioned that you were going to be late, but for anybody who is just tuning in, Keith Allen has just joined us. He is a TA and algo trader, order book analyst, and co-founder of Material Indicators. Keith, I know that you had to be a little bit late, but I'm glad that you were able to join us. So thank you.
Me too. This is my favorite hour of the week.
Ours too. Well, I mean, we all say it behind the scenes. I'll speak for all of us now and put us all on blast here because we all agree.
There you go. Well, obviously I've been saying for a long time, 69K is the number we need to flip. And we've had literally dozens and dozens of attempts, but they all ultimately retrace. All of those wicks were signs of weakness, and I'll go ahead and share and we'll just run through it and see what's happening in the order book so we can get a feel for a sense for whether this feels like the move or not. I will start on the candle chart just to kind of highlight what we're seeing here. And, all of these, dozens and dozens of attempts and failed attempts at RS flipping 69K, and it just has not been sustainable. And I had I guess last week, as we were heading towards the monthly close, it was like, man, a close above 69K would be amazing for the monthly. We had a little teeny wick. Literally just a few bucks over 69K, and then a block of, I think it was like 17 or 18 million and Ask Liquidity dropped down on it and hammered it down. And we came down and tested the 21-day moving average. And, that I was good. I was good with that. And I said, it would be, that would have been a very nice, clean and tidy move. But that doesn't seem very Wild West of crypto. What seems more like the Wild West of crypto would be to retrace the range and potentially go after 69K again for the weekly close. Well, we did retrace the range. We didn't quite get it for the weekly close, but 2 hours after the weekly close, Bitcoin pushed past 69K again. And of course, that one also retraced. We had a block of bid liquidity push that down again. And yesterday, the same thing. So now what we're looking at, this obviously looks like a great candle here, right? However, how far can it go? And what do we have behind it? And this is my concern. What I like out of this price action is that we had this one candle back in mid-May that after breaking down, and I think this was, I forget exactly, but I think this was somewhere around when Hamas launched all the rockets when Iran launched all the rockets at Israel, things broke down, and then we had this lower low at 56.5, and then climbed back out here. So we had this one candle that reclaimed 3 of the key moving averages, right? All 3 that it lost, it reclaimed in one candle, and then we had a retest of support here at the 50-day moving average, 2 of those retests, and then another big candle up. And of course, we had that breakdown. But after the breakdown, we've tested this 21-day moving average now, 1, 2, 3, 4, and we're now on our 5th day above that level. This is pushing the range up, and I like that. I'd been saying for a few weeks now that I felt like this is just too wide of a range up here to almost 74K down to 56.5. I didn't really consider that much of a consolidation. So this is really more indicative of what I like to see in a consolidation. Even if we fell back to 65K, I'd be good with that. But even better yet, above this 21-day moving average, and this is moving up, right? If this continues to creep up daily, then we're not too far away from getting this up above 69K, and maybe that's where the flip happens. If this move indeed is not sustainable, we'll see, right? So it looks pretty good right now, but what's behind it? So let's go ahead and peek at the order book, and we can see, number one, we've had this liquidity overhead, and much of it has dropped down lower to compress this range, which, the net effect of what's coming up from above moving down and what's from the bottom moving up is compressing that range. So that part is positive. In terms of where we go from here, that's a different story. We've had a little bit of help from liquidity movement. And yesterday, we had this bit pulled from here and moved up, and that kind of opened the door. And then we had another block come down, and that pushed things back down. And today, kind of a similar set of circumstances where liquidity has moved up and kind of opened the door, or in some cases pulled, like it did here, has opened the door for that move to the upside. Well, what's below it? Air. This is a real concern for me. We do have ETF flows happening, and that's a positive thing, right? And I think that people expected ETF flows to just be like moonshot up, and things have certainly leveled off. But we have a situation now where we have 15 consecutive trading days for ETFs here domestically that have been net positive. We have yesterday, I believe, Hong Kong. I read from my guy I like to follow, Eric Balcones, I think, posted from Bloomberg that Hong Kong had an all-time high yesterday on their inflows. And I read another article that says Australia launches their Bitcoin spot ETFs tomorrow. So this all builds into the demand narrative. And I think that's going to be part of the grind upwards. Not a moonshot, but slow and steady wins the race, so those things are all bullish to me. But what is not yet bullish to me is the bid side of liquidity, right? Where is it coming from? And so we've yet to see, we've seen a little bit come in above 65K, but not really anything substantial. So I'm looking to see one of those big blocks, if not a ladder of liquidity, move in above 65, preferably above 67, and ultimately 69 to push us through here. We could, it's conceivably that we wick up into this range. But whether we stay there, whether that's sustainable, to me, requires something to come in beneath to support it, and that has yet to materialize.
Keith, am I just looking at it? Sometimes we'll kind of zoom in and get that contrast, right?
Right.
But is there not? I mean, you're talking about how you'd like to see the liquidity move up and really build that support. It doesn't look like there's really any support for it right now.
So remember, when we move through a level, we take the liquidity out, or it gets or it gets moved, right? So and that holds true for both directions. But it has not replenished. I mean, it's very, very thin. You can see 1.6 million, 500,000, less than $1 million strung through here. That's just, price can move through that like a hot knife through butter. So so it's just down to 69K where we start seeing a little bit that could absorb. Now, there are conditional orders out there, which would be, a conditional limit order where that iceberg may not appear until price reaches that level. So that's what kind of surprises the market sometimes. One just popped up right here, right? This just happened right before our eyes. So those are the kinds of things that keep things moving. But we're not seeing a sustainable amount, or what I consider to be a sustainable amount of support down here to keep this up, unless we have, new blocks that come in, like this one just appeared, and it's not very big. It's, what are we looking at here? Almost $6 million. That's not significant. But look what's stacked above: 13, another 4, another 5, another 5, another 10, 12. And so, onward and onward. And then we get to 72, there's another 33 million. Now, keep in mind, this is just on one exchange, right? So 33 million doesn't sound like a lot, but is a significant amount at one level on one exchange, and this being the biggest exchange with the most volume. So this constant movement of liquidity is what we've seen here over the past few days. The fact that it's been in a tight range has helped us consolidate, but it's this movement that is making way for the volatility that we are seeing, and maybe getting a little bit of a tailwind from some of the economic news. It's always a coin toss of whether this is going to matter or not. The market is looking for an excuse. The market hates sideways. I happen to think sideways is healthy. The market freaking hates it because they're impatient and it's harder to make money. But it's healthier for the overall good of the market, I think, to have some of this consolidation. I don't know what your thoughts are, but I think those are healthy things. So the market looking for any excuse it can get to pump, and I'm no economist, but I'll just try and put this in very simple terms, right? We're looking for reasons for the Fed not to hike rates anymore and to start getting into a cutting cycle. And what do they want to see for that? They want to see growth come down. They want to see unemployment go up. So in this situation, Red Book year over year, that basically is same store sales year over year growth. So it's not every retail outlet in the world, but I think it's like 9,000 stores around the US. Major chains that would have multiple stores year over year. Their year over year their growth is 5.8%, but that's down from the previous metric that was 6.3%. So it's moving, it's trending downward, which is what Fed watchers want to see. Likewise, JOLTS job openings are coming down. That means less opportunity to work, less jobs on the market. Tomorrow, we'll see another set of reports And then, of course, on the bigger ones coming on Thursday, continuing jobless claims, those are pretty self-explanatory. Those are the kinds of things that the market and the Fed is studying very, very closely to see when they are going to make their next move, other than pause and hold for the market. So the market likes, Fed watchers like this, in terms of what they saw today. At least that's what the price action seems to be reflecting. And again, show me some bid liquidity down here, and I'll have confidence that this is a sustainable move. Until I see that, until I see those candles printing above 69K, and I mean not just one candle, because this one still is already through, came from below. So this still is not a full candle body. Tomorrow we'll get another chance at a potential full candle body above that, and then I want to see more stacking above there to go after this all-time high. Until that happens, I don't see this as sustainable. Now, what happens if we do break down here? I was looking at the weekly chart here earlier in my earlier analysis.
Keith, really fast, talking
Yeah.
about how it's not sustainable. Blake MC commented and said he's waiting for the 69,000 bounce. That he's been fooled too many times. So he's kind of thinking something along those same lines. Wait, it's going to go back down to 69 and then maybe bounce back up. And that's where he's going to be gaining his confidence.
Right. So you want to see that level tested. And interestingly, this was never tested. 52K wasn't 50 to 52K was never retested, and neither was the 40 to 45K range. So
right.
So the fact that these moving averages are being pulled up over time is a positive thing here, right? So in terms of where they sit right now, the 21 day and the 21 week moving average are two of my favorites. And the 21 day, we know where that's sitting. We just looked at that, and it's now above 67. I think it's above 68 at this point. It's above, it's above 68 at this point. And the red 50 day is around 65. And those levels have some significance here, because look at where liquidity is, right? Is there, here's 68, here's 65. Hold it, with what we see here, maybe we have enough to hold above this level. But it's not so much that it can't be cut through, obviously. But in terms of where if things were to break down even further, we still do not have any real sentiment for sub 60K. We've got a block at 60K. And in terms of getting down into that 50 or even that 40 something range, that's not looking like something that's currently in the cards in terms of where liquidity sits. But nothing makes liquidity move like price action, right? So if we were to break things down and lose this level here, or even lose this, then I promise you're going to see liquidity start to move into that direction. Right there, it doesn't exist. If we did get that breakdown on the weekly, that aligns right now. The 21 day or 21 week moving average is above that 61K level. We're trying to keep it above 60K, so that's good. And the 50-day moving average is moving into this range here, or 50-week moving average is moving into this range here, which, if you recall, has been the area this is my hopium level of retest, because we've had more consolidation in this range. We're now starting to get that extended period up here, but we had a significant amount of consolidation in this range that I thought
that's the 42-ish.
This is the whole range is 40 to 45. The
40,
sweet
40,
spot, I
okay.
think, up here is around 44K.
Yeah.
This would just punish people. I mean, this would be brutal for the market. But I would celebrate it all the way down. I would.
And all the way back up.
Absolutely. And the reason, we've had these shenanigans and all these wicks down here. The reason I haven't allowed this to shake me out is because I have confidence that ultimately, and I don't know if it's going to be next week, next month, or towards the end of the year, or even into next year, but we're going higher. I think I think the most of the world believes we're going to go higher and we're going to make new all-time highs at some point. It's just a matter of when. So,
Keith, do you think high before low? I mean, how realistic do you think your hopium level is? Or Mark or Corio, like, do you guys have a hopium level that you think is actually realistic?
in terms of
I'm
what,
without,
like where we
I'm
go, or
without
what's
bias
For the
right now.
cycle.
say that again?
Okay, like right now, Keith, you're talking about that 40 to 45, right? Like that sweet spot. That's your hopium level. It would destroy the market, but you'd love to see it. Is it realistic, or is it like strictly hopium?
At the moment, this is not realistic because there is no, number one, there is stronger support currently up at this level,
Yeah,
and parallel to that, there is liquidity up at these levels, but not down here, right? So this should conceivably hold. I need a refresh on that, I think. This should hold. However, the market doesn't do what it's supposed to do. The market doesn't do what you want it to do. So you have to be
I wish it would
prepared.
listen to you.
You just have to be prepared. Yeah, it doesn't listen. But you just have to be prepared for those possibilities, right? So I don't think it's at the moment, I don't think it's a high probability move at all. Unless things break down further. And that could certainly happen, right? I mean, there's certainly plenty of things that could tank the market on any given day.
Of course,
I
right?
mean, how many black swans are circling the pond right now between the economy and the geopolitical situation, and God knows what else is hidden back there that we aren't even thinking of yet. So,
And we're not being downers, right? I mean, this is just reality.
no,
There are different things that you want to
no,
take into consideration when you're considering how you'd like to, kind of approach your trades.
exactly. So there is some decent liquidity above 65K. Okay. That should absorb, and ETF demand is there, Um, but until I start seeing this color, these brighter colors, meaning more depth of liquidity above this level, it's very difficult to imagine breaking through this unless they just roof pull this and it disappears and they open the door.
Right.
Keith, you mentioned about liquidity. I just wanted to ask you how leading is this, because you mentioned that also as soon as price goes up, liquidity also moves up as a reaction. And we've seen that you mentioned that a few times. So how can you use the liquidity as a leading indicator?
Okay, so to use it as a leading indicator, is that the question?
Yes.
That's a great question, actually. And the simple answer is I take my cues, I take my clues from the liquidity movement. When I woke up this morning and I saw that liquidity had been raised from above, that had been pulled or moved up, I had a good sense that price was going to move up. Didn't have a sense that it was going to be sustainable because I didn't see much coming in below. Right here, we're now seeing, and this is new. We're seeing a little bit come in here, and by a little bit, I'm talking this is less than $3 million, but at least it's something above 69K. So when you see moves like this, then you look to see if anybody is gonna try and front run that or stack on top of it. But when I see liquidity moving, and it's easier to see on the lower time frame charts, right? When you see it moving, stair stepping, or getting pulled, that is an indication that things are going to go in that direction. And if I can, let me see if I can get a better example of that for you. This is the weekly chart now, but look at this. See this block right here that I'm circling? Let me take off the price tag tool.
Yeah.
This
It's like the yellow
this block right here. Look what
Mhm.
happens as soon as it appeared. Price moved down.
Yeah.
Right. And and then this one came in and hammered price down. Price moved down. And and here's another one. This appeared, price moved down. So it doesn't always happen, but more often than not, when you see these movements, it is, I call this liquidity herding. And they are herding liquidity in the opposite direction, often to get, to either get, bids or asks filled on, the opposite side of whatever they're pushing it, And that's, you could call that manipulation, but quite honestly, it's just whales using their stack. And if you had hundreds of millions of dollars, you'd be throwing it around the order book too. So liquidity movement is a clue, and then of course the order flow is a clue. And historically, purple whales have had the most influence over Bitcoin price action in our bin CVD, because they trade so much more frequently than the brown mega whales do. The brown mega whales are making larger orders, but they can't always make orders that size into thin liquidity, otherwise there's slippage. And so, when they're working in tandem, when they're both working in the same direction, then you really get movement. But the fact that purple has been buying through all of this this week for the most part has been also a positive sign. So I take most of my cues from where the liquidity is moving and what purple whales are doing.
That makes sense. Corio, did that answer your question?
Yes, absolutely. Thanks a lot.
Awesome. Keith, thank you so much for going through all of this. Do you want to add anything before? I know we're a little over an hour, but does anybody want to add anything?
Corio, I missed I missed your initial preview, and I caught most of Mark's. Just what can you give me the quick summary of what you think? What do you think is happening right now?
Yeah, we have very opposing views. It seems in the short term, I'm more bullish, and you mentioned that people will be destroyed if we go back to 45K. That's your dream case. I will certainly be destroyed. So I'm much more positioned in the bullish side. So I mentioned that I'm expecting this range that we are seeing to hold relatively in the next month. I mentioned that I would expect from now on until summer that we hit a low that should probably be above 60K in my opinion, and then from October I would expect very bullish price action.
Okay, so just because I say that I have eyes on 44 if there's a breakdown doesn't mean I think that we're going there. I did state that I felt like these moving averages were going to hold. So I would like to see, and I do expect an extended consolidation. To me, above 65K would be very healthy. If we start getting into the 60K levels, we obviously have some historical consolidation at that, and RS flips at that level. So I'm totally good with that. I'm positioned much like you. I'm positioned for the bull market at this point to take off, and I've sold only. Gosh, I was overweight on Bitcoin, and I sold a little bit just to be able to do some trading with it while we're chopping sideways. But I'm positioned for the bull market for sure. It's really opportunities if we were to break down further for me to pick up more Bitcoin cheaper. I would, if that happened, I would put the capital that I have left that I'm using to trade right now. I would put it down here, or here, wherever we go. I actually have those stink bids placed just in case. So that's
you never know.
That's one way I preserve. That's right. I mean, Berkshire Hathaway went to almost zero yesterday. Went down 99% yesterday for a brief moment, right?
Oh wow!
There was a computer glitch, and a handful of stocks, including Berkshire Hathaway, had 99-point-something% dumps yesterday.
Wow. Yeah. Okay. So you hear it. Like, I mean, you never know.
You never know. I mean, you're talking to a guy that has that was a victim of a 70% downside Matic wick a few years ago, and so after you go through something like that, you're like, well, it could, nothing is out of the realm of possibilities. But no, I do agree with you, Corio, that we could be in for an extended consolidation period. From what I'm seeing at the moment, just from a TA perspective, it looks like it should hold above 65K. And if it doesn't, I'm happy with anything above 60K. If we lose that 60K level, then I have concerns that that we're going deeper. But like I said, there's currently no sentiment for that in that range because we just don't have the bid liquidity there, right? So until that materializes, I don't see a reason to be overly concerned about that.
Keith, I was going to joke and say, why are you so bearish? Because you told us last week that you said, I'm prepared, just in case.
I'm always prepared for a move like that because the minute I'm not prepared is the minute I get screwed.
Exactly. Yep. No, nobody blames you.
So I want to see upside, and I expect to see more upside, but I don't think any move to the upside is sustainable until we RS flip 69K.
Yeah. Someone's calling 58K again. They're commenting. Okay, so Corio was saying last week and then this week a little bit, he made that flip from Bitcoin to Ethereum. Corio, correct me if I'm wrong. You're kind of saying that, right? That the narrative, the Ethereum narrative is very strong right now. You kind of made this flip. This is kind of your play of the moment, right? Mark was speaking about trading BTC against Ethereum and having these two as a trading pair, right? You generally really focus on Bitcoin, but I'm curious if you've looked at Ethereum at all, at the fire charts and things, if you considered this, or if you really, we also stick to, or we say stick to what you're good at, what where you're comfortable.
I do have some Ethereum that that true to form with my exposure to Ethereum is underwater. But I'm holding on to it because of the narrative that's there. I also have some Litecoin just because, but I'm most comfortable with Bitcoin. I did actually just see a headline, and I'm not one to react to the headlines, right? I just haven't had time to read the article yet.
Buying the news?
But I did see, I saw an article today that Kathy Wood has withdrawn ARK's ETH ETF application.
Withdrawn?
Yes. Meaning they're not going to get into the ETH game.
Right. Any truth to it? We don't know.
I don't know. I could probably look in the course of this call, but
who was it that did that? Was it Cointelegraph or who was it that did the oops article? Wasn't it with the Bitcoin ETF?
Yes.
Do you guys remember that?
Yes, I do.
Wasn't it them? I think, and then the market went up and then it kind of corrected, right? I think that's what it was. It was like, oh, sorry, we didn't mean to.
Let's see.
I know we went over a few minutes, guys. Sorry. We'll just see if we can kind of see if there's any truth to this.
Oh, I didn't realize I was doing this live. I just realized I have my
take
screen
you
up.
Off. Here, I'll remove you. Now you could do it privately.
Okay. Here we go.
In the meantime, while you look that up, I know, as I had just mentioned, Corio was saying BTC to ETH. Mark was saying BTC against ETH. Keith is comfortable with Bitcoin. Mark, what you didn't say, for anybody who's new to the call, as the project lead of Bancor, a product of yours, of Bancor's, is Carbon DeFi. Carbon DeFi is a nice way to create exotic trading pairs. So you can do rep Bitcoin or, against Ethereum and pick your exact prices or price ranges that you would like to trade at, including this sort of buy low, sell high, automated recurring. I wanted to throw that in there because you hadn't really mentioned it. And as we're speaking about this trading pair, I wanted to make sure that the viewers were aware of this product that I feel could help them.
So what I'm seeing here
for me to share.
Just real quick, this article is behind a paywall from Bloomberg, but it says that Kathy Wood's ARK investment abandons spot Ether ETF ambition. ETF name revised to drop ARK in their amended filing. I think they were doing a partnership with 21 Shares on this, but they said they'll remain committed to their spot Bitcoin ETF. So, like me, perhaps they're sticking with what they know.
Yeah. Well, it's not a bad idea, right? You stick with what you know. Sometimes when we dabble and we feel that FOMO is when we start to kind of lose sight of what it is that we're actually setting out to do.
Yeah,
Um,
I have a relatively small portion allocated to ETH at the moment. I'm much more weighted in Bitcoin, and I look at ETH and I look at alts as opportunity to not so much as a diversification, but some of those things are going to soar more than Bitcoin will. So
right.
why not put some money over
Yeah.
there?
Yep. Corio, Keith, Mark, thank you guys so much for joining me. It's always so wonderful to see what you guys are up to, see what you're seeing, get, all of your insights and things, really kind of get into your brains, I
I
appreciate
feel so
that.
misunderstood. One of these I'm going to do, and I'm not going to show any bearish scenarios, nothing to the downside.
Nothing bearish?
I'm just only going to show up. I'm just going to show. I'm just
That'll
going
be a
to show.
Well,
top.
I was
It'll be
like, don't
it'll be a
worry,
top
Mark
signal,
will
Keith.
step
Don't
in.
do it.
He'll balance you
It'll be.
out.
You know me. I'll be all up only, and then we'll see a crash.
Well, I think people are going to start wondering what the hell happened to Keith if he's like all of a sudden up only and hey guys, this is it,
No, I think
you're way too grounded and real about it, which I think is what we all appreciate, all three of you guys. So thank you
I mean, it's going to be
again.
interesting because we started this podcast around a year ago, and so let's see in 1 year, in 2 years, how our bias will change. Because if the bias is some people are always bearish, some people are always bullish, is that true? And I'm also very curious what will be my view in 1 year, Keith view, Mark view. It's going to be very interesting.
Is Corio still going to be bullish a year later? I think you definitely have this longer term vision though, right? Like you might feel a little bit bearish at moments, right? Or a little bit more bullish at moments. But overall, I think it's very bullish. Keith, you're kind of like
Yeah.
the right here, right now.
Yeah,
Mark is just kind of our resident bear.
This has probably been my hardest transition, is transitioning from trader to investor, right? Because sometimes it's a trader's market and sometimes it's an investor's market. And what I've learned is that buy and hold can be very difficult to beat, and it just requires patience. And so I have been stacking sats towards building this position since November of 2020, since the FTX crash. So it has been a slow grind to get here, to allocate funds to do this. And now that I'm pretty much allocated at this point, I could have, any improvements I make are going to be incremental improvements on my average entry price. And unless it's a significant dump, like down to the 50s or 40s, it's not going to improve much, because most of what I have allocated is above, is from below 58.
Somebody just said 58. Somebody just said 58
is
again.
58 is the bottom end of that range, right? This consolidation range here is 58 to 60.
Yeah.
So, we have history there.
Yep.
Don't have any liquidity. Don't have any liquidity at 58, but we'll see.
We'll see. We'll see next week. We'll see before then, you guys. If you don't follow Keith and Corio and Mark on Twitter, please do. I believe I have their handles in the description. If not, Crypto Corio has his up there. Keith, it is KA__ Productions.
Nope, just KA Productions. Just
KA Productions. That's right. Material Indicators is MI_algos.
Yes.
Yes. And Mark, MB Richardson 87. So give everybody a follow. See kind of what happens between this week, next week. We'll kind of do an overview again. You guys are wonderful. And thank you to all of our viewers. I appreciate all of you guys. We'll see you next week.
Thank you very much.
Thank you, guys.
Bye.
Thanks, guys. We'll see ya.